What if I told you that some completely ordinary people, teachers, mechanics, nurses, young adults with tiny paychecks, even retirees who started late, became millionaires without winning the lottery, without starting a business, and without picking risky stocks? What if the secret was something so simple that most people overlook it because it sounds almost boring?
Hi there. Before we dive in, please take a moment to read the full disclaimer on the screen.
Today, you're about to discover the truth behind 3 index funds that quietly turned regular people into millionaires. And by the end of this video, you'll understand exactly how they did it and how you can follow the same path. So don't go anywhere, because what you'll hear today could change everything about the way you think about investing. Before we get into the 3 index funds, let's clear up something important. Becoming a millionaire through index funds isn't magic. It doesn't require insider knowledge or complicated formulas. It comes from understanding one powerful idea: owning small pieces of hundreds or even thousands of companies at once, letting them grow, and giving time the chance to do what time does best. But the part most people fail at is consistency. The people who became millionaires didn't stop when the market dropped. They didn't panic. They didn't chase the next shiny investment. They simply kept adding a little money, over and over, month after month. Now, before we jump in, let me ask you something. Do you think becoming a millionaire is more about luck or more about long-term discipline? Drop your answer in the comments, because this question reveals a lot about how people think about wealth. I'm really curious to see what you believe. All right, let's get started with the first index fund. This fund is responsible for helping millions of beginners grow their money without needing to know anything about stock picking. This is the S&P 500 Index Fund. You might have heard of it, but most people don't understand how powerful it really is. The S&P 500 includes the 500 biggest companies in the United States, companies you use every day like Apple, Amazon, Coca-Cola, McDonald's, Google, and so many others. When you buy this index fund, you're basically buying a tiny piece of all of them at once. Instead of guessing which company will win, you invest in all of them. One of the most famous examples of this fund's power is from people who started investing small amounts decades ago. There's a story about a school teacher who consistently put money into an S&P 500 index fund for years. She wasn't earning a huge salary, she wasn't living a fancy life, but she was consistent. And when she retired, she had over $1 million just from this one index fund. No complicated strategy, no trading, just patience and consistency. The crazy part? Many people who invested only a few $100s a month ended up with 7-figure portfolios after staying invested for 20-30 years. Think about that. Most people spend more on things they don't even remember a month later, yet a simple monthly contribution could turn into life-changing wealth. Let me pause here and ask you something else. If you had $1 million invested and it paid you money every year without you working for it, what's the first thing you would do? I want you to drop your answer in the comments, because I'm really curious about everyone's dreams. But let's keep going. The second index fund that made ordinary people millionaires is the Total Stock Market Index Fund. Instead of just the 500 largest companies, this one includes almost the entire U.S. stock market, thousands of companies of all sizes. That means you're not just investing in the giants like Apple and Microsoft, you're also investing in medium-sized companies and even smaller, fast-growing businesses that could become the next big thing. One of the big reasons people became millionaires through this fund is because it captures the entire growth of the U.S. economy. When the country grows, the market grows. And when the market grows, your investment grows. A lot of people don't understand how powerful broad diversification is. When one company struggles, another one rises. When one industry slows down, another one expands, and you benefit from all of it. There's a true story about a UPS worker who never earned more than a middle-class salary but invested in broad stock market funds like this one. He lived simply, invested consistently, and just let his money grow. When he passed away, he surprised everyone, including charities, by leaving behind over $70 million. Yes, that's a real story. And no, he didn't win the lottery. His secret was time and compound growth. Now, think about that for a second. Most people think only high-income earners can invest, but time is often more powerful than income. The earlier you start, the less you need to invest to end up with a huge amount. If you're watching this right now, I want you to think about one thing. If you knew that investing even small amounts every month could completely change your future, what's stopping you from starting? Fear? Lack of knowledge? Not knowing which fund to choose? Drop your honest reason in the comments. I want this video to help you break that barrier. All right, let's move to the third index fund that turned regular working people into millionaires, and this one is especially popular for people who want exposure to the biggest, fastest-growing companies in technology and innovation. This is the NASDAQ 100 Index Fund. It includes the top 100 non-financial companies on the NASDAQ exchange, which means you get heavy exposure to tech giants like Apple, Amazon, Netflix, Nvidia, Meta, Google, and many others. A lot of everyday investors who started putting money into the NASDAQ 100 back in the early 2000s, or even after the 2008 crash, ended up with huge portfolios years later. Why? Because the tech industry exploded. Think about how much the world has changed. Smartphones, cloud computing, artificial intelligence, e-commerce, streaming, electric cars. All of those massive shifts created enormous growth in the companies inside this index fund. One of the craziest examples happened with people who kept investing even when the tech market crashed in the early 2000s. Everyone around them was panicking, saying tech was dead. But the people who stayed invested, who kept adding money even during the worst times, ended up seeing their investments multiply many times over. Some became millionaires. Some retired early. Some reached financial freedom long before their friends. Now here's a question for you. When the market drops and everyone is panicking, do you think you would stay calm and keep investing, or would you be tempted to pull your money out? Be honest and leave your answer in the comments, because this one matters a lot. Millionaires are built during down markets, not up markets. At this point, you might be wondering, if these index funds are so powerful, why doesn't everyone invest in them? The truth is, people get distracted. They chase hype. They try to time the market. They get scared when the market dips. They compare themselves to others. They think there must be some secret trick. But the secret is actually the opposite. Simple, boring consistency. And that's something most people struggle with. Investing isn't about timing the perfect moment. It's about spending time in the market. The people who became millionaires didn't buy at the perfect time. They bought regularly, no matter what was happening in the news. Before we continue, if you're getting value from this video, go ahead and like this video right now and subscribe so you don't miss more content like this. And if you want to support the channel, share this video with someone who wants to learn about money but doesn't know where to start. You could be the reason they discover a path that changes their life. Now let's continue. What's amazing about these index funds is that they work even if you're not an expert. Even if you don't know how to read charts. Even if you don't know how to pick stocks. Even if you're busy with work, family, or life. Index funds don't require your time. They grow quietly in the background while you live your life. But there's something else you need to know. It isn't just about choosing the right fund. It's about choosing the right habits. The habits of millionaires are not flashy. They are not loud. They are not dramatic. They are consistent, patient, and disciplined. Millionaires aren't built overnight. They're built through thousands of small decisions. Every dollar you invest is like planting a seed. Most people never plant seeds because they want results immediately. But the people who plant seeds over and over, even when nothing seems to be happening, end up with a forest. A forest that provides shade, safety, and financial freedom. Let me ask you a question. If you had the choice between a flashy investment that might double fast or a quiet investment that almost always grows slowly but steadily, which one would you choose? Comment below. I'm curious how many people prefer fast risk versus slow stability. And now here's the final piece of this video, the part most people ignore but is probably the most important. The people who became millionaires didn't rely on motivation. Motivation fades. Discipline stays. They automated their investments. They made sure the money went in before they had the chance to spend it. They didn't leave it to memory or mood. They built a system. And you can do the same. Whether you choose the S&P 500 Index Fund, the Total Stock Market Index Fund, or the NASDAQ 100 Index Fund, or even all three, you can build wealth quietly, steadily, and predictably. Your future self is watching you right now from the distance of time, hoping you make decisions today that make their life better. The question is, will you? If you want more videos like this, make sure you like, subscribe, and share this with someone who needs it. And before you go, answer this final question in the comments. Which of these three index funds do you feel most confident about investing in for your future, and why? I'll be reading the comments, so I can't wait to hear your thoughts.